CBOE launching Bitcoin futures on Sunday. The CME futures are going to launch in just a few days. The cryptocurrency trading around 18,000 right now. And curiously enough, as Bitcoin has been booming, gold has been sinking. Is it a coincidence or perhaps something more? Jim Urio and Scott Nations are your traders today. Jim, let's go ahead and start with you.
Well, is Bitcoin a big deal? I hadn't heard. Actually, every place I go, every cab drive I get into, every barber I go to, I mean, everyone, that's all they want to talk. It's amazing to me. This is a big week for the futures markets because, like you said, the CBOE launched its contract with some success. The CME launches theirs on Sunday nights. The interesting part about the futures contracts being launched, and I think they're going to be good contracts, is that it partly legitimizes Bitcoin over other currencies. I think the problem that people are having here is that they're in love with blockchain technology, particularly as it relates to transfer payments, but we anointed one at the expense of all the others, and I'm not so sure that was the right thing to do.
Well, we anointed one because it had the first mover advantage. Let's face it, Bitcoin had the first mover advantage.
MySpace.
And that's exactly the point I was going to make. So, Jackie, I'm sorry to break the heart of gold, but you're no longer first in my pantheon of stupidest investments ever. Bitcoin is the stupidest investment ever. Jim draws the distinction between Bitcoin and the blockchain. Blockchain is the internet in 1997, and Bitcoin is either MySpace or Pets.com.
Okay, while Bitcoin has made some investors very wealthy, one Wall Street veteran won't touch it. Peter Boockvar is the chief market analyst at the Lindsay Group, and he joins us on the phone now. Peter, always great to talk to you.
Thanks, Jackie. Same here.
Listen, everybody's rushing to get some Bitcoin, and you're staying away from it. Why?
Well, I'm going to separate the price from its concept, what spawned it, what it will eventually be. But the price is a classic mania. If Bitcoin went to 50,000 or $5 tomorrow, I don't think either price would surprise anybody. So I don't know how to price it. It's from a chart perspective, it's a parabolic mania like anything else. And I don't know how to value it. Its concept, I get, an alternative currency, an alternative form of transacting for goods and services, but the price itself is nothing more than a historic bubble.
Peter, let me ask you this. How much higher does it go from here? How big could the bubble get, I guess is what I'm asking.
I have no idea, and anybody who tells you is just picking a number out of thin air.
Yeah, when Jim started the show and he talked about the barber and the cab driver, it reminds me of the tech bubble. You'd get into a taxi cab, and if they knew that you worked for CNBC or they knew you were involved in the market, they immediately wanted to jump on, right?
It's exactly right, and I think all of us have stories. I had my sister, I had my mother-in-law. I mean, when things go up to such an extent, it makes the news and people start paying attention.
We're talking about cryptocurrencies even for other things. Venezuela saying maybe it'll do cryptocurrency based on its oil supplies. What are the biggest issues that you see emerging from here, and how has Bitcoin set a trend?
Well, the problem with cryptocurrencies generally is that there's potentially an infinite amount. I mean, even Bitcoin is now forking and sort of spawning brother and sister coins like Bitcoin Cash. So when you have a potential infinite supply of something, even though Bitcoin itself is somewhat limited, I don't even know how you value it, because each day that goes by, there's another crypto forming, and with unlimited supply, well, then what's the price going to end up being? And it will likely be much lower, but again, who knows from where? I mean, I think there's now 1,000 different cryptocurrencies. So what good is it if you can spawn a new one any day?
What do you think could cause a decline in Bitcoin futures, and how quickly could that happen, Peter?
Well, I guess there are a few. One is just it flames out. Number two, if maybe it starts forking into more different derivations of Bitcoin, people start to just wake up that, well, this is not as unique anymore. It could be something regulatory based. It could be a hack. It could be someone who loses their coins. I guess it could be a combination of or any one of these things.
If given a choice, Peter, between Bitcoin and gold, you would choose gold, although it's not necessarily reflected in the price right now. I assume that's because gold is a tangible asset, right? Yeah, but if Bitcoin is being perceived as this alternative currency, well, gold is one as well that has a very long history to it. So I would not be surprised when the day comes when Bitcoin falls. Maybe that's when gold eventually rallies. But
they should be grouped in the same category if people consider Bitcoin an alternative currency. And yeah, it's of the digital variety, but it's much more difficult getting gold out of the ground than having a laptop and creating some new cryptocurrency.
Jim's going to jump in here, Peter.
Peter, right now we're talking about, I guess, maybe $350 billion of total market cap in the cryptocurrency world, probably $400 billion by the time this show ends. If that were to crash now, let's say from a regulatory response, would that have ripples in the rest of the financial world? Could that bubble popping cause a panic and anything else? And if not, what market cap does cryptos have to get to before it will?
I wish I had the answer to that latter question. I think, would it matter for everything else? Realistically, no. But from a psychological perspective, you could also argue that this incredible bull market in pretty much everything, driven by artificially low interest rates and massive central bank liquidity, is now manifesting itself in Bitcoin. And if Bitcoin were to fall by a dramatic amount, well, maybe that's reflective of a different attitude towards speculating. I mean, we have interest rates in the U.S. that seem to now go up every day, at least on the short end. Today we had a new fresh 9-year high in the 2-year note yield. At some point, the rise in interest rates will begin to matter. We're seeing inflationary pressures build. And if that's the case, at some point you'll trigger a reassessment of speculation everywhere. And since it's blown up the most in Bitcoin, yeah, if Bitcoin falls a lot, I think that's maybe a tell on speculation generally in this crazy environment.
All right, Peter, thank you so much for that insight.
Thanks, Jackie.
Jim, Peter's obviously saying that he would buy gold. He doesn't like Bitcoin. So if the viewers are watching, they want to get in on the gold trade. What is it?
Well, gold's clearly out of favor right now, but I think with everything else going up the way it is, I could see a bounce. We talked about it last week, and I said 1240 was my target on the downside. We've hit that. Now, a little bit more strength in the Feb contract. 1242, I think, is a spot to get in to play the short-term bounce with a target up to 1252 and a stop place below 1237. Now, this, again, is a stop in. A lot of times, probably about 75% of the times on short-term trades, I like to wait for strength or weakness and then jump on board. Sometimes there's a lot of confusion with this on Twitter. If anyone needs it explained to them, just send me a message via Twitter, and I will. But I think that gold could pop here, even with the dollar getting stronger as it has.
All right, Scott, you usually hate gold. So what are we doing today?
Hates it.
Do
He
you agree?
always hates it. I'll play the part of Scott.
Well,
He hates it.
I was going to say, Jim said that now gold's falling out of favor. What do you mean now? I mean, actually, given where the Fed contract is right now, Jim is almost certain to be elected here. He's going to get long. And I don't want to be long. And it's not because I hate gold in general. It's because of the current environment. What do we find out this morning? Inflation is higher than expected. What are we going to find out tomorrow? That the Fed is going to raise rates. What are we likely to find out tomorrow? That the Fed is likely to raise rates more often in 2018 than we had expected. That's all bad for gold. So, take away the Bitcoin argument as far as gold is concerned. Just fundamentally, it's not the place to be right now.
But what have we learned over the last 2 weeks, particularly when they had the auction for the Da Vinci painting? For me, that set things off. There is lots of money globally that wants to worm its way into very odd things. Bitcoin is only one of it. The stock market, you say, is a much lesser example of that, but an example of that nonetheless. So I don't know. To me, it seems like there's money that's looking for homes. It is not unreasonable to see gold rally a bit, despite the fact that we have a raising rate environment.
And Jackie, Jim's rationale for buying gold is actually the reason the stock market is making a new all-time high today.
Amen.
Because stock market is a place that pays dividends. It's doing a bunch of stock buybacks, so you have a way to equitize your investment, as opposed to something like gold, which can't even return the rate of inflation.
Right,
why? Because it goes up by the rate of inflation, but you have to pay to store it.
The only thing I would
insurance.
argue is that equitize is even a word, but everything else, I like your theory on that completely.
I bet you I can find that.
Okay, whatever.
All right, gentlemen, we are going to get the risk reward on this trade, and then we're going to move on. Jim is buying gold at 1242. He's targeting a move up to 1252. Each point in this trade is worth $100, so he's risking $400 to make $750.